On this and what to expect. Cameron Peacock joining us from IG in Melbourne now. Cameron, what are you expecting at the open on the Aussie market?
Yeah, good morning, Bridie. Look, obviously we're expecting a fairly strong risk-off day. We're currently calling our market down about 48 points, or just over 1% below 4,500 at 44.95. It'll be the first time it's actually dropped below 4,500 since Tuesday of last week. But obviously you've talked in great detail already about what happened on the US session. Obviously we fell below some key technical support levels, which pushed us a little bit higher yesterday. 1422 was the level we had been talking about yesterday on the S&P. The markets fell through that like a hot knife through butter yesterday, and finished convincingly lower for the session. So a real risk-off session today. We did have a stronger US dollar. We had base metal prices getting crushed. We saw iron ore prices actually holding steady at $117 a tonne, but that's not going to help BHP out today. We've got its ADR call down about 66 cents, or close to 1.9%. And we also saw the energy sector getting smashed in the US last night, down about 2.4%, with crude prices falling 2.6% to be at their lowest levels in over 3 months. So a real risk-off session today, and look like trading below that 4,500 on the open.
What in particular is the main worry? Is it the earnings outlook? Is it Europe? The slowdown in China? What in particular?
Oh, look, I think it's hard to put your finger on any one reason. I think all of them are valid reasons. Coming into the US earnings season, we had been expecting to see a fairly weak earnings season. I think EPS contraction of about 1.7% was what was predicted heading into the earnings season. Thus far, I think something like 30% of companies have reported, about 37% have beaten on the revenue line, about 57% have beaten on the EPS line, and that's a little bit below historical averages, and it's really starting to show that the global slowdown fears, which we've been talking about for the last couple of months, have started to work their way through into corporate earnings. So that's certainly something to keep in mind, and is certainly part of the reason why the market has fallen. And you also look at the falls in the context of the very good third quarter that we saw on the stock market. I mean, the Dow Jones and the S&P were all up sort of between 4.5% and 6.5%, I think, for the third quarter. So perhaps a little bit of profit taking with the weak corporate earnings outlook. And then of course you've got the multitude of European issues which have been playing out for the best part of 3 years. They've never really gone away, and they tend to flare up in different countries and to different degrees, month after month. So we've got earnings in the US, we've got the European concerns, and then we've got China issues bubbling away in the background as well. So you've got those three things, and then you've got the uncertainty surrounding the presidential elections and the US fiscal cliff, which looms at the end of the year. So you throw in those 5 issues into the mix, and you can see why we are seeing a little bit of profit taking at the moment.
Great to get your thoughts, Cam. Thank you so much.
Thanks, Bridie. Cheers.